All right, what's up, guys? Welcome back to another episode of the Living the Dream podcast. Today on the show, we have Justin Dixon, who is a recruitment and real estate entrepreneur. Justin, how you doing?
I'm good, man. Good to be here. Appreciate you having me on.
Of course, thanks for coming on. And we like to jump right in. So if you could start with telling us a little bit more about yourself and what you like to do for fun, that'd be great.
Yeah, so just a real quick background on me. Grew up in a real small town in central PA. Kind of fell out of college. I fell into the recruitment industry. Been doing that for the last 15 years. And then January of 2020, I decided to quit my very stable six-figure salary job to start my own recruiting business, which is not a great timing because COVID was ramping up. So 2020 was not a great year from a recruitment perspective. But I did that. I kind of quit my job to start my recruiting business, but also to get more focused and have more time to devote to real estate investing, which we can talk about in a bit. So last 2 years or so, I've been running a recruiting business as well as a real estate investing business. Recruiting business is called Hire Tomorrow, and the real estate business is Great Venture Capital. So what I do for fun, though, which is a question that you asked, real estate is kind of my fun thing. Like recruiting is something that I do. It's kind of fairly kind of normal for me because I've been doing it my whole career. So kind of using the other side of my brain and underwriting deals and working with people that want to get involved and passively invest in real estate's fun because, if you would have asked me 3 years ago, would I be a real estate investor and, investing in 100+ unit apartment complexes, I probably would have said no. So the fact that I can kind of bring that opportunity to other people is a lot of fun. I also golf. I moved to Texas with my wife back in October of 2020. So we live in Austin and wish I would have moved here 10 years ago and bought as much land and real estate as I possibly could, just given what has happened in the real estate market here. But obviously hindsight is 2020. So we joined a golf club down here. So we golf a lot. Today it's like 80 degrees. It's mid-March right now for whenever people listen to this, but so golf, go outside. We're training for a marathon right now. So I've been doing a lot of running. That's kind of what I do for fun.
There we go. Love it. Would you be willing to send me your training regimen for a marathon?
Yeah, I literally found it. I Googled train marathon. So it's not anything that I created. I just ripped it off somebody else, but it's, I'll send it to you for sure. It's pretty easy. I literally just get up. He says, run 5 miles. I go run 5 miles. And then the next day I run 7 or whatever it is. So yeah, it's, you follow it and I'm going to trust that it's going to get me from 0 to 26 miles in May. So hopefully it works.
Sounds good. There we go. Awesome, man. Well, tell us a little bit more about, you started your business in 2020 from stable six-figure job to running your own business. Tell us about the adversity that you hit when COVID struck and how you dealt with it.
Yeah. So to back up a little bit, I grew up in a small town. My dad worked for the same company for over 30 years. My mom taught and she was a special needs teacher. And so I was always kind of instructed and my financial acumen was, get a stable job with a good company, invest in 401k, buy a house, and you're kind of done, right? That was kind of the advice that I got. And then in kind of mid 2018, I read a book, Rich Dad, Poor Dad, and it immediately flipped the mental script for me. I was like, why am I not investing in real estate? Why am I not investing in businesses and running a business and all of that fun stuff? And so I was at a little bit of a tipping point because my mind literally shifted that day. But I was married and we bought a condo a year or two before, and I needed to get my wife on board. So I shared the book with her and just asked her to say, hey, just read this and let me know what you think. She read it and literally was like, what are we doing? Why are we not investing in real estate, buying real estate, all this stuff? So that started the mindset shift of like, okay, what can I do that's not a 9-to-5 job? And I'd always wanted to start a recruiting business. So that was kind of I'm a good recruiter. I know I've got a good network. We were living in Philadelphia at the time. This is 2018, 2019. So the economy's good. People are hiring. So, we started to have that mindset shift of, okay, how do we do this? And we're both very risk averse people. So, we read a lot. We ended up buying a duplex in Pittsburgh, PA in mid 2019, sorry. And so we were like, okay, this makes sense, but we're not independently wealthy, so we can't just keep going buying duplexes, all the time. And so I'm a saver. That was my upbringing. I'm a very budgeted person, and I'm a saver. And so I saved up some money. And so I wanted to have some financial runway, some financial cushion, so that when I decided to leave my job to start a business, both in recruiting and start a real estate business, we had some cushion that if something happened, we were okay. And we downgraded our lives. We moved out of our condo. We actually rented out our condo in Philly, and we lived in an apartment out in the suburbs. So we kind of took our expenses and shrunk them as much as we possibly could without, eating ramen and hot dogs every day. So we kind of had that, like, okay, we need to kind of condense our lifestyle enough to have some cushion. And then January was kind of the day I went in and quit my job. And luckily I had the ability to do some side consulting while I was employed as a W-2 employee. My employer was totally fine with that. So I had a client or two, so I had some momentum, right? I didn't start at zero. But then obviously, our worst case scenario was I won't like being my own boss. I won't be able to fill jobs because I won't be able to get clients or whatever the case is. And then I'll just go find another W-2 recruiting job. Well, when COVID hit, nobody was hiring. So nobody was hiring recruiters, or, my last job was the head of recruitment. So they weren't hiring heads of recruitment either. So, I'm very fortunate that I have a very supportive and, a loving wife that, she was able to and willing to take on the burden of, being the steady W-2 employee. She had a great job at Comcast, and, she's in HR. So we were just nervous that, maybe her job would get cut, but, we had the financial cushion that we could survive a year, if she lost her job, and if COVID lasted as long as it has, we would be financially okay. And so, I had the support of her. I drank a lot of bourbon that year to kind of cope with kind of what was going on. But I think it was more during that year, I actually joined a mastermind with other entrepreneurs that had either started businesses that year or they were successful already and they were trying to take their business to another level. So I just kind of put myself around like-minded people. On the real estate side, I joined a syndication group. And because recruiting wasn't busy, I was like, okay, I'm going to use this opportunity to devote this year, 2020, to learning the multifamily syndication game. Because there's a lot that goes into underwriting a 100-unit apartment complex, as opposed to, trying to underwrite a 2-unit duplex. So I used that year, obviously there's some dark days and I regretted my decision of quitting my job and all that stuff. But, hindsight, I'm really glad that I stuck to it and I didn't just try to fall back into the corporate world. Again, having a supportive wife that was, saying, hey, we're going to be fine. Like, this is, it sucks, but, we're going to get through this, et cetera. And just putting myself around like-minded people that, were going through some of the same struggles that I had. Some of them started businesses back in, 07. So they went through the financial crisis of 08, 09. So, they're like, hey, if you can weather the storm and things start to open back up, a lot of companies are going to shut down. A lot, like the recruiting businesses, a lot of recruiting businesses are going to shut down. So you may be poised to capitalize on, some other people's, scared, because they went back into a W-2 job or something like that. So that was a really long-winded answer, but I want to kind of give the context of how we got to the decision of, quitting a W-2 job and jumping into entrepreneurship with both feet.
Yeah, no, for sure, man. Thanks for that. Thanks for that context. Thanks for that story. And thanks for being honest about the dark days of you had some bourbon to cope and you regretted quitting your job. And I feel like a lot of entrepreneurs will come on podcasts and it'll be just the glory days of yeah, it was hard, but I did it and I'm better for it and just all positive. But
yeah, no, I mean, it was literally, January was fine because, COVID was still kind of, overseas. And so, it wasn't in the US as much. And, we were luckily we moved to the suburbs. I'm really glad we didn't get locked down living in Philadelphia, because that would have been a nightmare. I talked to a lot of people that still lived in the city and it was just awful. So I went for a lot of walks outside. I tried to, do as much as I could, tried not to watch the news, right? Because that would take you down a spiral. But yeah, there were some not awesome days, but again, you got to surround yourself with people that, are either going through the same thing you are, or maybe they're successful and they can help you out and just talk through, what you're going through, and share advice, and, also just give you a shoulder to, lean on and say, let me just vent for, a little bit. So yeah, it's always about your kind of, your tribe that you're kind of plugged into is going to help you get through things, both good and bad. So.
Yeah, absolutely. I love it. Well, let's jump into your motivation now. Tell us about what gets you up and keeps you going every day.
Yeah, I think part of that whole rich dad, poor dad mindset shift thing was, I realized that, oh, you don't have to work until you're 65 or 70 and then retire, right? There's like a whole other way to live. And, that everybody talks about financial freedom and, getting to that point, and that number or that point is different for everybody, depending on the lifestyle they want to live, when they're financially free. But my why is, it's my wife and I right now. We don't have any kids. We just have 2 cats. So, I want to own my own time. I want to do what I want, when I want, where I want. So that's what gets me up in the morning, because we, late last year, we put kind of a line or a marker in the sand, that in 5 years, it's 4 years from now, that, we'll hit the kind of financial foundation mark, that I call it, which will give us the ability to cover all of our kind of daily life through passive income. So I want to be able to build my recruiting business to a point where I can, hire great staff. I'm at the point right now, that I'm busy enough that I can hire somebody, and I'm waiting on an offer acceptance, hopefully, from a candidate that I extended an offer to last week. So, that could be good news. That'll help me catapult my career, my recruiting business, but also to continue to invest in real estate and help other people invest, which will help us, again, generate more passive income and all that stuff. So, that's what kind of motivates me, because when we first started, it was really just like, oh, financial freedom, that's great, but how do we do it? And what's the number, right? And again, that number is different for everybody, depending on how they want to live. So, having that kind of, future goal, in a book called Vivid Vision is a great book, because it kind of helps you to put those things in place and write things down and really focus on what are the, key milestones you need to hit and how to hit them, and, putting action around them. And, as we're talking about books, another good book, it's a 12-week year. If you haven't read it, it's a great one. It kind of helps you to kind of prioritize, instead of trying to do something in a year, try to do it in 12 weeks instead of 12 months, kind of a thing. So yeah, those are some of the things that kind of force us to get up. But, my why, to talk about why, is really kind of just being able to own my own time.
Love it. Love it. And I think, honestly, a lot of it comes down to that owning our own time and then being able to do what we actually want to do in the moment. And I think that's when we, sometimes we may be working, we may be grinding. It may not always be the most fulfilling work, but when you have that freedom of time, you can go seek that, like, have that servant mindset, have that high quality fun that, we're all seeking every day.
Yeah. I mean, I'm not ready to go sit on a beach for, the next 20 years of my life, but, do I like the fact that I have a business that's successful and I can, go sit on a beach if I want to for a couple of weeks? But, and when you have that kind of financial stability, you are able to, take longer vacations or whatever the case is, and, enjoy your time and not have to be constantly plugged in and all that stuff. So, yeah.
Exactly. There we go. I love it. Well, let's jump into your dreams and goals now. I know we have one that you've kind of already discussed of 4 years from now, hitting that financial, what do you call it, stability mark? Financial
foundation. Yeah. I kind of, financial freedom is kind of like ambiguous. It's too ambiguous. So I want to lay the foundation so that it's kind of like, okay, all my life expenses are kind of covered. And so anything above that obviously is gravy, right? And that's that point where it's like, okay, we can work if we want to, and I think in 4 years, I'm still, I'm not going to be 60 yet. I'm going to be, in my 40s, but, it'll be a situation where I'll be able to, continue to have my recruiting business, which hopefully, knock on wood, is growing. So one of my goals in the next 4 years is to continue to add staff. In 4 years, I'd like to have at least 10 employees, so that I can get to the point where I can have people below me that are running a lot of the day to day, and I can, focus on some of the things that I want to focus on, but have the business be running itself. And, right now I'm working in the business because it's just me. And so as you add employees, you can, not take a step away from the business, but you have, right now, if I stop working, I'm on this podcast, I'm not doing anything for my recruiting business other than promoting it and things like that. But, I'm not recruiting candidates and things. So when I have employees, even though if I take a week off, they're still doing work, right? So like, you kind of got to get people, on the bus. And so that's one of my goals. I've got some bucket list kind of trips and things like that, which I'm happy to talk about, but, they're more like going places and doing more experiential things. But I think from a business standpoint, continuing to help people invest in real estate, which is really a passion of mine now, and getting my recruiting business to the point where, I've got people that are, doing work for me and working in the business and also being successful for themselves.
Yeah, absolutely. I love it. So we got hitting that financial foundation mark, hiring 10 employees for that recruiting business in
Yep.
the next 4 years, and continuing to help people invest in real estate. Let's dive into real estate real quick, because I feel like we've had some people on, they've touched on it, but like, tell us a little bit more about the process and what it can do for people, et cetera.
Yeah. So again, we read the book. If you haven't read Rich Dad Poor Dad, you want to get in real estate or you want to figure out how to start businesses and things, just my opinion is read it. It's a great book to kind of get your mindset shifted in that sense. But what we started out doing was what a lot of people do. And we started small because I didn't have the mindset ready for me to say, oh, I can go jump into taking down a 100-unit apartment complex. I don't have the net worth to do that or the capital to do that, et cetera. So, we went small and I didn't want to go single family route because I wanted to diversify my risk and spread it across a couple different units. But so we found a duplex. So I was like, okay, if one person's there, at least the other unit is, occupied and they're paying rent. And so I want to pay the full mortgage. But then we realized like that doesn't scale unless you have money and things like that. At least for our stuff, we weren't able to figure it out. So I was like, okay, well, how do I use other people's money to invest in real estate so I can help take down these 100+ unit apartment complex deals, but then they get some return as well, right? And so I found this whole world of syndication where we just do that. Like I'm a part of a group of about 120 people that are spread across the US. Some people are very focused on finding these deals. So they're going out and talking to brokers. They're doing some initial underwriting to make sure that the deal makes sense. And we typically go after kind of BC class assets that are probably built in the 70s, 80s, and 90s that need some love. Maybe the operator and owner that's operating the business now or the apartment now hasn't put money back into the property. They haven't, fixed the deferred maintenance things that happen. They haven't really increased the appeal of the property, et cetera. And so we buy these assets. We get debt on them. So we get a mortgage to use kind of the normal buying a house scenario. And then, that's typically 75% of the price, the purchase price. And so then we have to raise the rest. And so where do we get that? Some of the people that found the deal, the general partners, will put in their own money to find and fund the deal. But then we raise money from other people, right? And so you don't have to be accredited. We do 506Bs, not to get too kind of in the weeds, but there's two types of kind of syndications you can do, a 506C or a 506B. We do 506B, so we can't advertise, but we can talk to people about what their goals are. And then if I find a deal, I can bring it to them and say, hey, here are the returns we think we'll get. Here's the amount of money that you need to invest. And really that's all they need to do is just invest the money. And they're not investing in me personally, they're investing in a business. So a real estate, a property is a business that we have third-party property management that's local, that runs the property. We manage them. And, we hold the property for 5 to 6 years, and people, the investors, the limited partners that are the kind of passive investors, they are generating cash flow on an annual basis. They're going to get any kind of upside if we refinance the property and when we sell it. So, you're getting a kind of a win-win-win scenario. Oh, and by the way, it helps you defer or kind of you get a lot of tax benefits by investing passively in real estate. So again, it opens up your eyes of like, wow, I can, invest in this real estate. I can get tax benefits by doing it, but also I'm going to get cash flow. And that's where the passive income comes in, where you can start to really, if you invest a decent amount of money, you can offset a lot of your daily annual expenses just by investing in real estate. And literally all you need to do is put in money, and then you trust the operators are going to try to hit the numbers that they've kind of anticipated. So it's a beautiful thing. And I share it with people, and some people don't get it, right? They're like, it's too complex for me. And trust me, that's how I kind of started. But once you start to dig into it a little bit, and that's what I've done over the last 2 years, is really learn the business and work with people that have been around doing it for decades, that have been very, very successful. And, it's a great hedge against inflation. We can go into the other benefits of it, but yeah, it's been great. Last year in 2021, my wife and I invested in 6 different deals across, I think, 4 states. So we've got a portfolio of about 950 units total. We raised money on 2 of those deals and helped people that we know passively invest in real estate and get access to the beautiful thing that is apartment syndication. I can dig into that more, unless that kind of gives you a good overview.
Yeah, no, man, I think that's a good overview. If there's something else that you want to highlight, feel free, but I don't really have any questions.
No, I mean, I think that's kind of the, again, I don't know the audience to know enough if they're, interested in it. I'm happy to talk more about it. Obviously in the show notes and everything, you can get in touch with me that way, email, I'll share my websites and all that stuff. But, my real estate website is just greatventurecapital.com. So happy to have people check it out. We push out content, that kind of talks about what a syndication is and helps inform people that aren't, in the know of what a syndication is and how to benefit from it. But yeah, I'm always happy just to talk to people about, what their goals are. Cause sometimes they're like, hey, I'm not interested in real estate. Maybe they don't get it or whatever, but I'm happy to chat with people about it and share my story more and tell them what we're doing and go from there.
There we go. Well, if you guys are listening to this and you loved, the idea of real estate syndication, you love the idea of real estate investing, hit Justin up. He's done it small scale and he's done it large scale. So make sure to have a conversation with him. I'm sure he would love to talk with you. All the ways to contact him will be in the show notes. So Justin,
cool.
Thank you for that on apartment syndication. I guess one follow-up question I have is, how much money does somebody need to be a passive investor, and how would somebody get started as an active investor?
Yeah, so the passive side, it depends on the deal. I've seen as low as 50 grand. I've seen as high as 150. But it just depends on the deal, and the minimums are typically set by the syndicator, the operator, whoever found the deal, depending on the market. So typically in higher, kind of more high traffic markets like in Austin or Jacksonville or something, they're typically higher. But if we go into a market that is, we call them tertiary, so they're not kind of a prime market. Maybe it's in central Alabama, but there's a lot of growth that's going on there economically. We may set the minimum lower. So it just depends, but typically it's kind of 50 to 100 is what I usually see. But getting into the active world, there's a number of conferences to go to. I'm always a big fan of learning before I jump in. Again, goes back to me being risk averse. I want to know as much as I possibly can before I jump into it. I realized very quickly, I kind of made a small investment in my learning in the very beginning and spent a couple $100 on, an online course. But I realized that it helped me to understand how to underwrite, kind of where I should look, kind of underwriting markets and what to look for in a market to invest in. And also how to underwrite deals. But it didn't matter if I found a deal. I had no way of taking it down. You can't just take down a 100-unit apartment complex as Justin Dixon. You have to have track record. You have to have a net worth, a certain percentage of the deal. And so there's all these hurdles that you have to go through, which is why I realized very quickly, I needed to join a syndication group. I wanted to find a mentor that would coach me, and they had the track record. So if I did find a deal, they would be able to go to the lender and say, hey, here's my track record. Here's my net worth. Here's my income, all this stuff. So I'm kind of trading on his experience, but I had to invest money to do that. So if you don't have a lot of money to invest, to invest in your education, like that's how I told my wife. I was like, hey, this is a pretty big investment, but think about it as if I went back to school. If I wanted to change careers, you're going to go back to school, whether you're getting an MBA or whatever. And that's going to be an investment. So that's kind of how I looked at it in that respect. So I would say, listen to podcasts, listen to people that are doing, talk to people. There's a ton of meetups wherever you are. I guarantee there's a meetup that's about real estate or multifamily, and there's somebody in there that's a syndicator. talk to people that are doing it. And then, I recommend finding a group that you can trade and use their experience to, take yourself from kind of where you are and ramp it up really quickly.
Absolutely. Couldn't agree more. Go find that group. We actually I had a 16 unit under contract recently. And Justin, I actually think I came to you about this. And yeah. One of the biggest things I ran into was I had two other guys on the team and we all lacked experience. So there was a lot of insecurity. There was a lot of lack of confidence, and that came through when we were talking to investors. So getting that group, getting that support system, one where you can have more experienced people look over your underwriting, preferably have them on the team, is the best move. It'll help make the deal go smooth, raise the capital. Because even when you're partnering with investors, you're partnering with people who are, maybe it's like, hopefully they're not putting their only 50 grand down, but maybe they have 50 of like 200 grand. They're trusting you with like 1/4 of their seed capital for their retirement. You need to be able to show some track record, ideally.
Yeah, trust me. The first deal that I brought to my kind of friends and family, if you will, was mid last year, and it was a deal that I invested in. And right now, I invest in all the deals that I bring to my investor database because I want to show to them that, hey, I trust this deal enough to put my money where my mouth is. And it was a guy that I golfed with back. It was a buddy of mine from Philadelphia, and he's like, hey, let me know when you have a deal. And I kind of had an idea of what he and his wife made, and I was like, hey man, I'm happy to have you in. I just, do you get what this is? He's like, oh yeah, I've invested in a syndication a couple of years ago. So he understood it, and we never talked about real estate before. And, I wish we had, but like, it was one of the situations where he's already done it, and you'll be surprised. I was shocked at who didn't invest in my first deal. And I was also shocked at who did, because sometimes it's not the people that you would think. Like, I have friends that make a lot of money, but they don't have a lot of cash. And so they are very heavily weighted in the stock market. And they've got a financial advisor that just pushes their money into mutual funds and all that fun stuff. And they don't have, a ton of real estate in their portfolio. But anyway, yeah, I highly recommend, when you try to get into this game, it takes a team. That's one thing I really, really found very quickly, and that's one thing that being in the recruiting world, I'm all about trying to find people and, place them at a company, right? So now I have this kind of real estate business, and I need to find other people that have skill sets that are different than mine, right? I'm really good at the underwriting, and I can raise some money, but then I need to find people that have the time to go find deals. So, and then I have to find the people that are going to be asset managers. So there's all these different facets of a syndication that you don't realize on the outside. And once you kind of peel back the onion a little bit, it's like, wow, this is a business. This is a well-oiled business. So it's pretty awesome. Again, I can talk about it all day. So I'll stop there.
No, all good, man. All good. Are there any other dreams or goals that you want to chat about before we move on?
No, I think that's it. I mean, a lot of our goals are business related. I mean, my wife and I talk all the time, and she helps out on some of the content stuff on our real estate business, but she's got a W-2, and she's crushing it in her career, and that's kind of where she wants to live. And potentially down the road, we may join forces fully and both be full entrepreneurs, kind of together and working in both businesses, which I think would be a fun goal, or a fun thing for us to do, because we work well together. She's way smarter than I am, so I'd be lucky to have her as a colleague in the businesses and all that fun stuff. But no, I mean, right now recruiting and real estate are kind of my babies at the moment, and it's funny because I talk to a lot of recruiting friends that if you ever know the recruiting world, it's very boom and bust, especially when you own a business or in the recruiting, the staffing side, not in the corporate side. So you can make a lot of money one year, and the next year you make not a lot. And so I tell them, like, hey, like, you're making a ton of money right now, but what happens when the world, if something else happens and the economy slows down and we don't make the money that we're making, you want to have invested that money into something that's going to generate revenue, right? The stock market's wonky right now. It goes up, it goes down. And so they're starting to think about, where can I put my money into hard assets like real estate and things like that. So the recruiting world is really good for, the real estate world, because make a lot of money in recruiting and pump it into real estate and, level yourself out. So.
Yeah, absolutely. I'm right there with you. Well, awesome, man. Let's go ahead and jump to the next question. If there were one or two people that you could meet right now, this could be a specific person or a type of person, and they would really help you take the next step towards your dreams and goals, who would they be and how would they do it?
Yeah, so I'll give you one person specifically that's kind of like I think it would help me just in the long term. But anyway, there's a guy named James Caan, Caan. He's a British businessman. He wrote a book called The Real Deal. So long story short, he started recruiting business back in the 80s in the UK, and he's been a massive, massive success. But I read his book a few years ago before I started my businesses, and just grew his businesses and how he treated his staff, but also how he gave back to the community was really kind of the blueprint that I'm trying to follow. Maybe I don't get as successful as he was, but the fact that he raised money for causes that he was passionate about, etc. So if anybody knows James Caan, I would love to chew the fat with him and chat with him a little bit. Just to get some more perspective. But so he's the one person. And then, from a recruiting side, if anybody on this podcast knows or listens to this knows any companies that need help hiring, I'm all ears. I'd love to, take on more clients especially as I hire more people. We focus mainly on technology, accounting, finance, and marketing. But I've filled HR roles and sales roles and things like that. But and then anybody that's interested in learning more about passively investing in real estate or even actively investing in real estate, frankly, I'm always happy to talk to people that are trying to get into real estate, whether it's, people that are trying to flip houses, which I'm not a flipper, but, I'm always happy to talk to people. And if I can connect them with people that I know are doing really good things in it, I'm happy to do so as well. And if they want to invest passively, it's also, happy to talk about their goals and see if it makes sense.
There we go. Well, what are the most important one or two things that everyday people can do to help you accomplish your highest priority dream? Might be some of the same, but is there anything else?
I think I'd love for people to share some of my things I push out on social media, some content, some likes and shares would be super helpful. That's one of my kind of things I think we'll maybe talk about in a second, but I'm trying to get better, and I'm going to be getting better at kind of being more social and putting myself out there. And, being on podcasts is great because I get to share my story with, people that maybe they're starting their real estate journey or starting a business, and, they're scared or they're excited or whatever. So getting more out there and doing more content, and, I think video is, very powerful because it gives you kind of the verbal and the visual and all that stuff. So, anything that I share would be helpful if they could just push the like or whatever button. That'd be awesome.
There we go. Share his content, engage with his content. And obviously his social media links will be in the show notes. So now we're going to jump into our Thriving Three. First question is, what's your favorite book, movie, or podcast? Pick one.
So I guess I'll pick a book. It's an Audible book, and I recommend listening to this book. And I'm not a big reader, especially not this is actually nonfiction, but not business related. Like normally I'm listening to business books, self-help, etc. But there's a book called Unbroken. It's about the life of Louis Zamperini. They made Angelina Jolie made a movie about it a couple of years ago. He's a World War II vet, Olympic athlete. Like just the stuff that he went through in his life is, they literally made a movie about it. But the reason why I say it was really good and why you should listen to it is because the person that is narrating the book has a really strong, really good accent. And, again, I'm not a big reader, but I would literally walk around the block, and I was listening to this while I was in Philly. So I'd walk to work and listen to it. And I would walk around the block like 2 or 3 times just so I could get to the end of the chapter, because I didn't want to stop it in the middle of the chapter. It was so good. And the movie doesn't do it justice because there's so much content that they share in the book. It's like it's about 30 hours or something like that. It's super long, but it was one of those, like, when you listen to it, it was one of those you couldn't stop listening to it. It was so good. So that's my non-business related book. But again, Rich Dad Poor Dad, Vivid Vision, 12-Week Year, those are staples. I think you should all check out for sure.
There we go. And what is one way you like to take care of yourself?
So I try to be as active as possible. Working from home is great because I don't have to worry about, commuting and all that fun stuff. But, it also it can be a little bit isolating in the sense that I go to the gym, I run, obviously, because I'm training for this marathon. So getting out and about, now that the kind of weather is getting nicer here in Texas, getting out and, golfing and things like that, those are ways I kind of move myself. But also buying a sit-stand desk, like I'm standing now doing this. So, try to be active as much as I can, even though I'm kind of confined to these four walls for most of the day. So, yeah.
Yeah, absolutely. Being active is key. Oh my gosh, taking care of your body. It'll just take you so far.
Yeah, I'm reading this book also. It's called Breath. It talks about how like we're all breathing wrong. It's a very fascinating book about, you shouldn't really breathe out of your mouth and like how our mouths have shrank over the years. It's like super fascinating. I'm listening to it while I'm running. So I get a lot of content while I'm running, 10, 12 miles. So it's fascinating, but just throw that out there.
Yeah, there we go. I've heard about that a lot. Some other people have come on the podcast and talked about breath work too. And how key it is to just, breath work, meditation, the whole being present in the now.
Right. Yeah, for sure.
Awesome, man. Well, what is one action step that you can take right now or continue to take if you're already doing it to meet James Caan?
To meet James Caan, geez. I need to I've already reached out to him at least once or twice over the last year or two, but I guess this would be an interesting way to get at him. So I'm a Chelsea soccer fan. Football, it's European football, and if you follow European football, Chelsea's going through a very rough time with their ownership, and I won't go into all the details, but he's a Chelsea fan, and that's actually one of the reasons why I started liking Chelsea, because I read this book and I was like, oh, I want to be this guy. So anyway, maybe I'll have to reach out to him and see if I can get his thoughts, not on recruiting, but on the Chelsea situation. He might have, I don't think he's got enough money to buy them, but they're up for sale right now. So maybe he'll throw his hat in the ring, which would be kind of nice.
No, that's awesome. Have you ever read the book Giftology?
No, I've heard of it, but I've never read it. No.
You should check out that book. John Rulin is the guy who wrote it, and he met Tony Robbins.
Got it.
Doing what he talks about in this book. So, and it's basically like giving really well thought out gifts. Like if you could get to know James Caan enough from his content, from, I don't know, stuff you find online, to think of a gift that will bring him to tears, I promise you he'll meet with you for 30 minutes.
Yeah, no, that's interesting. I'll have to check out that book. I'm always looking for like good, good mindset, business, self-help kind of books. So that sounds interesting. So yeah, I'll check it out.
Yeah, for sure. Sounds good. Well, we have one last question for you.
Yeah.
So you know how there are people on the planet who have a really fixed mindset? They're not willing to accept help. They're not willing to accept change. Sometimes they'll live their whole life like that, and sometimes they'll die like that. Other times, they'll make that switch to more of a growth mindset, willing to accept help and willing to accept change. In your opinion, what is the catalyst that causes that change?
I think some of it's timing. I think for me, I wanted to start a business and full transparency. I actually had started the LLC that I have now like 8 years ago or 9 years ago when I was working for another company, and I just kind of had it on the shelf and didn't really do much with it. So, the timing wasn't right for me at that moment to quit a job and jump in with both feet. So I think timing has something to do with it. But, and also when I read Rich Dad Poor Dad, like it was just like literally like I got done with the book and it was just, my mind was different. Like whatever happened, it was just different. I don't think I can go back. I probably could, but I wouldn't love going back into a W-2 job where I've got to, punch the clock and all that fun stuff. So I think a lot of it's around timing. For us also, we had the stability from, being in a marriage and having money saved and things like that. So I think timing and having that kind of stability to kind of take that leap, sometimes will, hold people back. Some people are very much more risky than I am, and they will just jump in with both feet with $5, in the bank, and more power to them. That's not my story and my journey. So yeah, I think timing comes down to a lot of it, because if you're not ready to receive the message, sometimes it doesn't matter who says it. You won't hear it, right? How many business books have you read that you've read and forgot about, and then you read the same style of book by somebody else that says it slightly differently, and it's like, oh, that resonates. So you have to be ready to hear the message. So I think timing is a big thing to do with it.
Yeah. Have you ever heard that quote, luck is where preparation meets opportunity?
Yeah.
I love that quote, and I love that you said timing, and you also hinted at knowledge with Rich Dad Poor Dad. Um, Robert Kiyosaki says something else. He says the deal of a lifetime comes around once a week, and I'm like, man, like there really are people out here right now, like doing real estate deals that like I wasn't able to get in on because I wasn't prepared to get in on
Right.
it.
Yeah.
And man, it just blows my mind because then I think of it like I'm a big Grant Cardone 10X fan. And I'm like, when I think about knowledge, and I'm like, Grant Cardone owns like $4 billion worth of real estate or something like that now.
Yeah.
And I'm like, how do you even like, I don't even ask those questions.
Like, oh yeah. Well, and think about our story. Like my wife and I story, we're not ready for a 10 unit, a 20 unit, a 30 unit. So we're like, we need to start small. And that's what a lot of people do, right? They dip their toe in and they're like, okay, I'm going to start with a duplex, or I'm going to flip a house or whatever. And that's typically the story. If you think about the real estate side, it's like, that's typically how it goes. Like you start with them, you buy a house, maybe you rent out a room or something and you house hack, or anything like that. So there's always, in my opinion, there's no right way to start something, a business, investing in real estate, investing in crypto, investing in whatever it is. Just start. Like, I think that's the other thing that holds people back is and I'm a very big analysis paralysis person where I have to have enough data to make it make sense for me, where, somebody sitting next to me with half the information, they've already jumped in with both feet. Right. So, sometimes I wish my wife and I weren't identical in the sense that we're super risk averse. I wish one of us was a little bit more risky and would have pushed the other to do, a real estate deal or investing in something earlier and all this stuff. But that's why I think it comes down to timing and being prepared and having enough knowledge. You're never going to know 100%, right? I think it's like you need to know, I can't remember who said this, but like you need to know like 70%, and that should be enough to get you to make a move, right? You're never going to know 100%. Who the heck knew that COVID was going to happen, in 2020? Nobody, right? So it's like, you can't prepare yourself for every, option that's going to happen, good or bad. You just got to kind of be prepared, and luckily we had a little bit of some cash stash that we could, fall back on if need be. And luckily we didn't have to, but I think, when's the best time to invest in real estate? Today. You can't time the market, just like stocks. You can't time it. If you wait for the dip, you'll miss it. So
absolutely,
just get started.
Well, there we go. Justin, is there anything else you want to chat about before we sign off?
No, I think I'm good. I'm glad we were able to do this. I know we've talked a couple of times the last, few months. So this has been a lot of fun, and I'm happy to see you're cranking out the pods and, been successful in your own right. So it's awesome. And I think if I can help you or anybody else, I'm happy to do so, whether it's recruiting or real estate or whatever. I'm excited to, be on the pod and appreciate the time for sure.
Yeah, for sure, man. Thanks for coming on. And if you guys are listening to this and you loved what Justin had to say, and some recruiting contacts, you are interested in real estate, or you happen to be best friends with James Caan, make sure to hit Justin up. Let's make that connection. Let's make this man's dreams come true. As we always ask, send this podcast to 1 to 3 people need to hear this. Shoot us a 5-star review on iTunes, and we're out.